With Bitcoin ETFs now becoming widely available and Bitcoin related stocks showing no signs of slowing down, we need to look at the data to find out whether we should be really holding BTC or need to consider some alternatives. Today, we're going to be looking at whether you should be buying Bitcoin or Bitcoin stocks and where better to start than the listed miners versus BTC chart we have here on lookintobitcoin.com, where we can see over the past 5 years the percentage returns of BTC in black here and a number of different Bitcoin mining stocks. Now, these mining stocks such as Riot and Marathon are investing all of their capital into Bitcoin mining equipment to compete for blocks, to earn that block reward and those Bitcoin block fees. And then that's what the profits are from. And that's why shareholders see some value in these, because over time they tend to, hopefully at least, make a little bit of profit. What we can see here is over 5 years, even though there are periods of outperformance from these mining stocks, they've all underperformed over a 5-year time horizon. If we go to a 2-year, very similar story. It's very close actually at the minute between Bitcoin and Marathon, pretty much on evens, but we have to also consider that these Bitcoin mining stocks, even though, like we said, there are periods where they may be slightly outperforming in terms of upside gains, there are huge amounts of time where they are massively underperforming. In a bull cycle like we're in now, we may see these big upside volatile swings in these mining stocks as there's a bit more hype. Maybe there's a bit more accessibility for more traditional investors in stocks related to Bitcoin than buying underlying Bitcoin itself. What we can see is in the bear cycles, these stocks massively underperform. If Bitcoin is going down 70, maybe even 80%, you can guarantee these stocks are going down 90+%. But if we just go onto TradingView here, what we can actually see is I've loaded up not just the mining stocks, we have a few of those. I've also loaded up a few actual Bitcoin stocks. So MicroStrategy, one that's very much in the limelight at the minute due to its massive overperformance compared to pretty much all traditional assets, especially in the S&P 500, as well as Coinbase, which again is very tied to Bitcoin, tied to maybe a more general cryptocurrency market stock that again is gaining a lot of popularity. If we just load both of those up here, we can see that from the date in which MicroStrategy actually transitioned into more of just a Bitcoin accumulation company than an underlying software development company. If I just change this to percentage gains here, we can see that was on August the 11th, 2020. So just to kind of standardize the data a little bit, I'll draw this on here and then we can zoom in to see how that's actually performed versus BTC. And what we can see is MicroStrategy, like the mining stocks, does have periods where it outperforms and periods where it underperforms. But we can see since MicroStrategy transitioned into just a BTC accumulation company practically, they have actually outperformed BTC over the past nearly 4 years since they've done so. If we look at Coinbase specifically since that went public, we can see that has actually massively underperformed the performance of BTC and has actually had negative returns in a period where BTC is up around 20%. So Coinbase hasn't performed too well. MicroStrategy, on the other hand, has performed quite well. We can also look at, like we saw previously, Marathon and Riot, and we can see that over the past few years that, again, there are periods of outperformance, but huge periods of underperformance. And if we zoom back to a multi-cycle basis, we can actually see that both of them have massively underperformed BTC. And while the ETFs have potentially paved the way for more sophisticated investors, more institutional capital to flow into BTC, we can actually see this haven't been around too long, so we can't get very concrete data on whether this is likely to outperform or underperform. What we can see is since these ETFs were launched, and this is just IBIT specifically, the BlackRock ETF product, it's pretty much one-to-one correlated. There's been no huge noticeable underperformance or overperformance from these ETFs. They pretty much just track BTC one-to-one, which makes sense because they are spot Bitcoin ETFs. Each time you buy one of these ETFs, you're pretty much buying BTC. So it makes sense. The only equivalent we have that has a bit more long-term data is GBTC, which we can see underperformed for a huge period of time. And only recently, once it actually started to convert into an ETF and acquire more BTC, that they've pretty much become level in terms of the performance again, which is what we'd expect. So really, out of all of these, the only Bitcoin stock, miner, product, derivative that has actually outperformed on a somewhat sustainable basis is MicroStrategy. One thing we do need to consider is MicroStrategy, who, like we said, are pretty much just accumulating BTC as much as possible, have been for the past 4 years. isn't just accumulating BTC with the profits, the spare capital on their balance sheets. They're actually using debt. They're creating debt to buy BTC. They're pretty much leveraging their own capital to buy more Bitcoin. So this is, in essence, pretty much just the same percentage gains as BTC, but multiplied by 2 or 3 times leverage, which does come with its own risks. Like we could see on this chart here, that there are periods where MicroStrategy does massively underperform. If we just go up from the all-time high here, we can see that while Bitcoin did see negative returns of about minus 75%, MicroStrategy was closer to minus 85%. And while we have seen an outperformance recently, again, this is mainly just leveraged gains, which isn't a true representation of potentially the performance you can expect going forward, unless they again continue to pile on more debt and purchase more BTC. But then we get into the risks with these Bitcoin stocks. And this isn't even to mention the fees associated with buying these. Usually, especially with the ETFs, there's management fees. With stocks, there may be fees in purchasing and selling your stocks, which may not be as efficient as some of the crypto platforms available. We also have to consider third-party risks. Obviously, Bitcoin being acquired by MicroStrategy through debt has worked very well for them so far. But at some point, there may be liquidation prices that are a little bit too close for comfort. There may be a restructuring in the underlying company which kind of changes their approach to the markets. They could start dumping BTC. I hope not, but realistically, we have to consider that that is a possibility. And compared to buying underlying BTC, which is much more in the heart of what Bitcoin stands for, a peer-to-peer electronic currency, not just for wealthy companies to hoard and say that they've created even more stockholder shareholder value. We also need to consider that when you are buying BTC, you're actually inadvertently helping everyone else with their BTC. If we go to something like the hodl waves chart here, we can see that when you're buying actual Bitcoin, when you're contributing the illiquidity of the Bitcoin network, it tends to have a much more positive impact on price than buying what basically amounts to a derivative of BTC. The more and more Bitcoin that is being bought up and not traded, not moved by investors, is much better for the network in terms of its future potential for price appreciation, because the supply continues to decrease. Whereas a lot of the alternatives, I know MicroStrategy are buying BTC. I know these ETFs are spot ETFs, but a lot of these mining companies, a lot of the other Bitcoin-related stocks are essentially just mimicking the price without having any positive impact on the network. And then again, you really do need to consider that pretty much all of these are just one-to-one correlated with BTC. If I just very quickly go back to this chart here, we can see even though MicroStrategy has outperformed, here I've just loaded up the 1-year correlation coefficient with BTC and MicroStrategy. And since the announcement, when the correlation was about 0 to BTC, meaning there was no positive or negative correlation with MicroStrategy and Bitcoin, since that point, the correlation has become pretty much one-to-one. So it really is just leveraged exposure to Bitcoin, and Bitcoin in itself being somewhat correlated to traditional markets. If we just go here and look at Bitcoin's correlation to the S&P 500, we can again see that a lot of this is just dependent on the overall market conditions. You're basically just leveraging up Bitcoin or buying something that maybe underperforms Bitcoin, when really it's all just doing the same thing anyway. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, almost all Bitcoin-related stocks or product equivalents like ETFs have underperformed BTC on a longer time frame horizon. And this is even excluding the fees associated with potentially just even holding these Bitcoin product equivalents. And we do have to acknowledge that there are periods of extreme volatility, especially in these lower market cap stocks, like we could see with a lot of the mining stocks, that can lead to outperformance in upside moves. But these are often very much short-lived. And there is the exception of MicroStrategy, which over a longer time frame has actually outperformed BTC, but we do need to consider that this is pretty much just a leveraged Bitcoin position. And then also we need to consider that in the bear cycles, pretty much everything massively underperforms BTC as well. And really, overall, Bitcoin securely held in a self-custodian wallet is almost always the best option for pretty much a vast majority of people out there. It outperforms almost everything, especially all of these Bitcoin equivalents, has no third-party risk. Like we could see, even though MicroStrategy is outperforming, there is, of course, the possibility that their positions in the future are liquidated, they change the board members, they start selling BTC, who knows? And we also need to consider that when you're buying and holding underlying BTC, it's much healthier for the network. You're not only contributing to the illiquidity, but you're really fulfilling Bitcoin's destiny, I suppose, of being a peer-to-peer currency rather than just a profit incentive vehicle that many institutions are just buying up that you can hop along for the ride on. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto interview reports, live and personalized indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are down in the comments below and on social media. Are you buying Bitcoin stocks like Coinbase and MicroStrategy to maybe even hedge your own Bitcoin positions? Or are you just loading up on true, real Bitcoin and are a bit more of a purist when it comes to your Bitcoin investments? As I said, let me know. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.